Hello, welcome to Distress Deals Decoded, where real estate problems meet real solutions, brought to you by your friends at Asset Resolution Advisors. Today, we are talking about the very sexy topic of the new FinCEN rules. So, what do real estate professionals need to know by March 1st, which was a few days ago? So, here we are talking about the FinCEN. Appreciate you all being here today. The federal government, so for those of you who don't know, the federal government is stepping directly into real estate closings. What they want to know is if you work with LLCs who are buyers, cash deals, whatever the case is, the rules of the game are changing. And there are no more anonymous all cash real estate purchases. Those are all have officially ended as of a few days ago. So today, what we're going to do is we're going to break down something actually pretty serious for agents, investors, closing professionals that everybody need to have on the radar. And with me today to help break this down are my friends Juan Nicasio and Patrick Butler. Guys, say hi.
Hello, guys.
Hello, everybody. Welcome to the FinCEN Spectacular.
All right. So one of the biggest things here is the shift in the transparency of the real estate challenges, I guess, that have come up where the government now wants to know no more anonymous buyers, right? They want to make sure that they're understanding who's purchasing these properties. The good part here is nothing really, there's not really something to panic about. It's more of being prepared to understand what's going on, what type of pressure this is going to happen out into the marketplace. And like always, we're going to talk about what the opportunities are. So let's get started and dig into this. Patrick, why don't you, from a real estate broker side, give us a little bit of information about what you see as the FinCEN rule and how we can work with it.
Yep, absolutely. So I've got to say, this is minor news compared to the year before, where we had the whole National Association of Realtors lawsuit over commissions, price fixing, antitrust, and all that other wonderful stuff, which is weird because antitrust rules were around in real estate ever since I got into the business, and that was over 40 years ago. So,
Mm.
so the fact that that lawsuit came about just now is a little shocking. Similarly, in my humble opinion, the fact that the federal government hasn't kind of gotten a little bit more involved with transparency as it relates to cash purchases from non-individual entities I think its time has finally come. Let's face it, we live in a world now where we've got to be careful. The bad guys that are money laundering or using illicit sources of funds, such as arms dealers and drug dealers and all these cartel kind of folks, it kind of just makes sense. So historically, that's been heavy on the bank side, right? So I possess an MLS license, which is a mortgage broker's license, and a good 20% of that learning and of the continuing ed is all about anti-money laundering and all that good stuff. So not shocked. The gap in the two different industries, real estate and mortgage, is what they're really targeting. So, as Steve mentioned, starting on March 1st, 2026, so it's already a couple days behind us, certain real estate professionals must file a real estate report. We're going to get into the details about that because real estate professionals, as you folks probably know when you listen to us, isn't just a real estate agent, but it's a lot of folks, title companies, in our vernacular, investors, although they're not going to be the reporting entity, they're going to be the entity reported upon in this new paradigm. And it's also for specific non-financed residential transactions. And again, the reason for that is there's already anti-money laundering systems in place for the lending side. So they've got that covered there. And also when the buyer is an entity or a trust, not an individual. All right. So we're going to talk about what's changed and what hasn't changed. But the goal, very simple, increase transparency so that there's more safety within the context of buying and selling residential real estate, by the way, to identify beneficial owners. You're going to hear that term a lot. And a beneficial owner is simply the person or persons that are the owners of the entity that is doing the buying. So if it's an LLC, the primary owner of that LLC or primary owners, and to reduce money laundering through real estate. I can't imagine that that actually happens, but according to the federal government, it must. I do recall, by the way, one of my first real estate transactions as a young agent in North Miami Beach. was a duplex purchased by a gentleman. I forget which Caribbean island he came from, but he brought with him a suitcase full of small denomination bills that we all sat around the closing table counting to close the transaction.
Oh,
There
man.
was no system of reporting in place back then. I don't even know if the title company sourced those funds because it was a cash deal. But anyway, news for another day. So FinCEN has been signaling this move for a number of years, and now it is nationwide and it is permanent. So, Juan, why don't you help us discuss which transactions are actually covered so that we don't freak out every time we take a buyer out in our car?
Yeah, those include the one that you did probably somewhere on the boat. But yeah, I mean, here's where professionals need to really pay attention. Like the transactions are generally reportable when all of these factors are true, right? So for residential properties, that includes single families, condos, town homes, and then you have multifamilies, but multifamilies from units 1 through 4, right? That's considered still residential. And then certain vacant land intended for residential use. We have different types of use cases for land, like commercial and big multifamily. So that's currently not included on the residential side. And then you have also non-finance transfers. This is typically means all cash deals, hard money loans, private funding in most cases or some cases, non-traditional bank loans, since there is already an anti-money laundering system in place. But one that we typically oversee is deals done in crypto, right? Because there are
Ooh.
some crypto transactions that are happening in the real estate space. Believe it or not, it still has to go through escrow, but it's something that the government definitely wants to monitor because, again, that is a form of payment at this present time. So FinCEN is especially, targeting deals that bypass the normal bank AML, scrutiny. Again, just really more so for real transparency and money laundering and terrorist type of protection. Believe it or not, some people may speculate differently. Oh, the government just wants to be in everybody's business, but at the end of the day, they have a duty to protect as well. So number three, buyer is an entity or a trust, right? So example, if you buy property under an LLC, a corporation, a partnership, a trust, including land trusts, those things are going to be reported as well. Individuals that are purchasing their own under their own name is usually not covered. So if you're just buying a piece of real estate under your personal name, obviously that's a much easier, right, to decipher through any kind of fugazi or funny business, right? When you're doing that way. It's just when you're trying to purchase property or do transactions in incognito mode, right? Bottom line here, what we need to know is that if you're doing any type of cash transactions, including crypto, uh, buying under an LLC, and the property is a residential property, these are the rules that really matter when it comes to these new regulations. So, Steve, I'm going to hand it back to you. Who actually has to file the report?
Yeah, so one quick question while we're on this one, and I don't know if any of us know the answer, but I want to get your thoughts and Patrick, your thoughts specifically. We talked a little bit about this before, which is do subject to transfers fall under this? It is a non-finance transfer, and in some cases, a lot of subject to will do a buy or a seller financing. So, do you think that's going to fall into this?
I think that if that individual is going to do the transaction, because remember there is a still a deed transfer, right? In these cases, and normally that's going to be done either in an LLC, a trust, or a land trust. So I think that will ring the bell, and you would have to go ahead and report it. From the finance standpoint, there really isn't a change in the financing. It's basically, hey, let's shake hands and say that, obviously there is a documentation, typically when you're doing those type of deals and you're doing a direct to consumer transaction, but you're still doing that under an LLC. Um, I would assume that the answer is yes. Again, we don't know the official rule, but I would say yes because although you're sometimes not exchanging funds, you're still creating a note, right? In most cases, where you're either paying on the back end or paying some sort of down payment. That's a cash transaction that should be reported. But
Yeah, you touched on the one thing that would be my question. I'm with you every step of the way. And then my little brain was thinking, well, yes, if no funds are exchanged,
mhm.
for example, then does it qualify? And I would have to suspect the answer might still be yes. So that's a great question, though, Steve. We'll need to get back to our
Yeah.
audience on that one. I think it's
Yeah, and it rolls into basically what we're talking about is the good part is agents and real estate investors, most likely it's not going to matter to you because what's going to happen is who has to file the report. I don't think it's going to be another file. We think it's really going to be associated with what FinCEN, they said it's a reporting cascade, right? So probably settlement agent, title company, escrow officer, maybe an attorney, depending on where you are, what state you're in. All of those who are doing the transaction are going to be responsible for this. So again, if it's a sub two and you're still transferring the deed, you're probably going to have a title company associated with it. Even though there's not title insurance, they might have the requirement. If you do seller financing, you are going to record it. Again, title company. So I think all of that will be addressed by that group or
yeah,
that contingency. They'll be responsible. This is really more about um, how the deal is structured and how the closing is. And more than anything, it's really making sure everybody understands you're going to need to collect this type of information. There are a lot
mhm,
of buyers in the past who have wanted to keep their information quiet, right? And that's why they create these LLCs that are very hard to understand who purchased them. I think all of that's going away. More documentation, more friction with the deals, but again, it's all here to protect everybody on the transactions.
yeah.
All right. So, Patrick, let me toss it your way. What information do you think is going to be reported, and how do you think it's going to play out?
Yeah, so my understanding is that it's pretty extensive, and I think based on our just previous section we were talking about, I would suspect that the professionals in the business are going to err on the side of caution and probably report, even though they may not know whether they should. But I think it's important to double check with your local attorney and or title company on that. But so expect the disclosure of the following bits of information. Number one, the buyer or the entity information. And by the way, Steve, you and I have dealt with this a lot previous to this in our bankruptcy and our short sale business. Oftentimes, a buyer in the form of an LLC submits an offer on one of our short sale properties or one of our bankruptcy listings, and the short sale lender specifically wants to know who the entities are. They want to see the articles of incorporation, they want to see the operating agreement, because lo and behold, in that space, what happens if the buyer happens to be the borrower or happens to be related to them, their husband, their wife, their whatever. So that's always been something that we've dealt with. So the buyer entity information, who the legal entity name is, the formation details. Again, is it an LLC? Is it a corporation? Is it a trust? That's going to be reported on as well. We talked about the beneficial owner or the beneficial owners. Those names will need to be checked because that's what they're going to go against to determine if there's any potential for money laundering. People that are on the anti-money laundering list and all the other blacklists, for lack of a better word, which is why we're all wearing black shirts today, folks, is going to be scrutinized by the federal government. And then who the signing individual is. So that's entity information. The other bits of reporting are going to be on the property details as well. The property address, as Juan mentioned, the type of residential property, whether it's single family, condo, duplex, 1 through 4, whatever, and the purchase price, which is interesting when we go back to our discussion of the sub twos, how that all gets sorted out. And then the payment information. What are the source of funds? Now, again, back in mortgage brokerage days, you always sourced funds, or at least they sourced funds once that became a big thing, right? To make sure that the funds were seasoned and they weren't coming from some bad guy account somewhere. And then the method of payment, and of course the accounts that were involved with that. They want to check and again, just like you would in a finance transaction, but in this case, it's for cash, non-financed. The buyer must certify beneficial ownership information is accurate. So there's going to be some affidavits signed off as well. So I am looking forward to actually probably digging into this report and see exactly what it entails. We may do a follow-up on this if the audience deems it of interest. And thank goodness I'm not filling out a 100 form document on reporting every
Well,
transaction.
well, it's kind of, one of the things interesting I've seen just even in the last few weeks, um, the title companies are starting to ask for additional information that they've
Mm.
never asked before. And I'm not sure they know yet what they need to report on. Because like I had one title company ask me for the address of the business, meaning our business, and I had one title company ask me for the address of the bank.
Hmm.
So I was like, wait, don't you mean our business address? No, I need the bank's address. I'm like,
Wow.
okay, that's weird. And like, oh yeah, that's what we're supposed to. I'm like, well, I'll roll with it, whatever you want. Either way, it's fine.
Better
I'm glad
safe than
I'm towards the
sorry, I
end of
guess.
my career and not in the beginning of it.
Yeah. So anyway, so Juan, what do you think all this means for investors?
That actually leads right into it, right? So, like
Yeah.
for the investor, the anonymous LLC purchases just got harder, right? More of a paper trail. They're gonna go deeper, even as silly as what's the bank's address, right? Which I being here in South Florida, that's actually a really valid question
Yeah.
because we've had some funny business with certain banks that pop up out of nowhere. Someone just happened to, I guess, create a bank, and God knows where it is in Hialeah. So um, sloppy operators will also get exposed, right? Much faster. So that is going to be a reality check for the investor side of things. You just got to get all your ducks in a row when it comes to that, and make sure that you have all of your affairs in order, your operating agreements, your money trail. If you have say funding partners, right? They also have to get their stuff together. Also, all that documentation, must be clear as day because all of that stuff is going to be reported. I know there's a lot of people that source funds through friends, family. Okay. So that's going to be something that they're going to have to work through and set up a better structure for that. Obviously, there's also other rules when it comes to sourcing funds for per deal or as a project. So that's something to kind of keep in mind. As far as the timeline and deadlines, they're as follows, right? These things have to be reported no later than 30 days after the closing and or by the end of the following month's closing. And the filings are going to be done electronically through FinCEN's BSA system, so they can watch the money transact back and forth, and they have some sort of ledger and accountability. Now, Steve, from an operational standpoint, what changes for I guess either operators or agents title?
Yeah, from what we just discussed and what we're starting to see a little bit, right? It's just new workflows are going to be coming in, and I think it's a matter of everybody being patient with the new workflows. Settlement agents, whether it's escrow, whatever it is in your local area, they're going to have different forms. It might be longer forms. They might ask questions they've never asked before. So really, it's just a matter of being patient with them and understanding that they're just trying to comply with the law. It's going to change. My guess is over the next year or so, the adjustments of those. They're going to need additional identity verification. We're already starting to see that sellers IDs are being asked for in certain situations, especially when there's an LLC. So just a little bit more movement in closing the back and forth. There's going to be more questions being asked by the settlement agents just to make sure they comply with this.
Yep. Yeah, I think it's probably not a terrible idea if you're a real estate agent or a broker, sit down with your friendly neighborhood title company and have them walk you through what they're going to have to report on, just so you
Mhm.
get
Yeah,
an understanding because, it's going to impact your customers. If you are the investor, that's the LLC, it'll impact you. So good to know in advance what all is going to be needed. And then you'll probably end up having to save all these documents someplace handy that you'll be using on a very regular basis
Mhm.
when you're doing these transactions. So what actually will change in this space? It's going to be more questions for the entity buyers, right? So get used to that. Get used to having the documents ready to go because they're going to ask for them. More documentation requests leads to longer cycles, longer timelines for processing, longer closing timelines, which can be detrimental if you're not prepared for that. So, like we do at Asset Resolution Advisors, we're in the business of things that take a long time anyway. Do everything you can to compress that time so that you don't
Mhm.
have angry customers, angry sellers, angry buyers, angry everybody, and certainly don't make it your fault. You want to be the one that's prepared for this stuff. And then, of course, greater scrutiny on the cash deals and non-finance transactions. What won't change is legitimate investors are still going to be fine. Cash deals are not going to, excuse me, not going to be banned, God forbid. And it's not going to kill any entity purchases. It's just going to be more reporting. So creative financing, folks, still alive and well in the swells. Don't worry about that stuff. It's just going to be a little bit of change. And, there's only two things in life that are certain: change, actually, three things: death and taxes, unless
right.
taxes go away, which would
Mhm.
be a nice thing, hopefully in my lifetime. Steve, back to you.
All right. So what does this do for you all out, right? What do real estate professionals who are operating properly, what opportunities this create? It's one of the things we want to talk about in all our podcasts are what are these opportunities? And one of the keys really is going to be understanding these rules, right? So this is a compliance rule. What we've always seen with compliance when it gets enacted, and we've seen a lot of it over the last, since the Great Recession, 16, 17, well, now it's 18 years ago, we've seen those who understand what the compliance are and they educate themselves always rise to the top. The sloppy operators, the sloppy investors, sloppy agents, sloppy title companies, they're all going to go away. They're not going to be able to keep up with this. They're going to get hit with fines. They're going to get hit with an overburdened system of trying to keep up, and they're going to exit. Agents, real estate investors, those who are going to hesitate, they're going to have to exit because they're not going to have any more business. So these are all things, right, that when you educate yourself, it really allows you to rise to the top. And it's something we've seen in our industry over the last, almost 2 decades at this point. So, it's really something that's important. I think Patrick's advice is great. Go talk to the attorneys, your closers, your real estate uh, title companies. Get a good understanding of what you're going to need to do, especially if you work within this realm. So, all right, how can you, as a resolution members and followers, how can you get prepared? So here's really what you want to do. First things first, make sure your buyers who are LLCs that they understand that this is coming up. Last thing you want to do is get to the closing table and find out that that your LLC has to disclose a bunch of things that they don't want to disclose or need a different LLC. And now you've delayed a closing or lost your closing. Very, very important to understand. You prepare for them now. Make sure they understand the beneficial ownership is starting this month. Starting this month, they must know the beneficial ownership. Very key point to this. Step two, coordinate with your title partners. We've already talked about this. Really important. The sooner you do it, the better. So you know what documents you need and what reporting they're going to be asking for. So in turn, you prep your buyers. Pre-screen complex deals, right? This is something we always recommend and something we do ourselves. Distressed deals have a lot of friction to them. Make sure you understand what you're getting into, right? Make sure you know who the entities are, what the cash structure is, what the compliance reporting requirements are. All of these things are going to be requested. There's no way getting around them anymore. It's going to be part of the closing. So make sure you understand all of those details with your buyers, with the sellers, so that your transactions are smoothed out.
Yeah,
Um,
absolutely.
yeah, so Juan, let's close it out here from our standpoint.
Yeah.
What's the big picture here?
Big picture is, let's first zoom out. FinCEN rule is just part of a much bigger trend. It's going to create a lot more transparency, more data, more scrutiny for distress and cash transaction. But remember, transparency doesn't kill deals, confusion kills deals, right? So the faster you can get educated and have all your ducks in a row, your documentation, well, like we mentioned earlier, it's about compressing the time because we all know that confusion and time kills deals. So if you can get ahead of the curve, whether you're a real estate investor, whether you're a title company, whether you're a closing attorney, or you're an investor, if you can just go ahead and get all of your ducks in a row, well, these things are not going to affect your actual transaction, right? It's just going to weed out the bad actors, which again, it's not a bad thing because that allows for more opportunity. Is the way that I see things. Investors and agents who are going to succeed in the next cycle will be able to be the ones that understand the rules, educate their clients, and then structure deals correctly the first time, right? Very similar to all of the things that we teach at Asset Resolution Advisors, where it's all about education and preparation. If you can get those two things done, man, deals do become smoother and easier to do, right?
Absolutely, and that's what we do for our members here at Resolution every single day. So again, if you're an agent, real estate investors, you're working within distressed opportunities, and you want some help navigating short sales, bankruptcies, complex ownership, compliance-heavy deals, please join us in our asset resolution community in school, because in this market, knowledge is power, isn't just power, it's
It's
profit.
profit.
So thanks for joining us on this episode of Distress Deals Decoded, where real estate problems meet real solutions. And we'll see you on the next episode.
Bye, everybody.